with respect to everybody's time, we'll just get started right now, even though there are still people joining on. So I'd like to take a moment to just express our solidarity with you all during this pandemic we find ourselves in, and our wishes are that you, your companies, your families, your loved ones are all safe, healthy, and in good spirits during this time. I know it's unprecedented and we're all dealing with it differently, so I just want to express that to you. For those of you that don't know Invennt already, we are a firm of specialist management consultants. We work exclusively with construction, civil engineering, and the built environment. So we're really excited to be able to share this with you today. I'm Sarah Hall. I'm a communications consultant at Invennt, and I'll be your host for the webinar. Today we have two speakers joining us. So you can see on the video there, Tim Fitch and Brendan Morahan. So they're from Invennt, the directors and co-founders of our company. They're here to highlight specific ways today that you can give your business a financial boost during the current coronavirus crisis. So as you're hopping on, we're just getting started. So first we'll start off with Brendan Morahan, who will be introducing various financial aids available during the crisis, followed by Tim Fitch, who's going to dive into detail on how you can boost your cash flow through innovation. So we'll be keeping everybody on mute throughout the webinar, but please feel free to type any questions that you have into the chat box. So it'd be great to see what parts of the country you're joining us from. If you just popped on, feel free to share your name and company in the chat box, and I'll hand it over to Brendan Morahan. Brendan?
Thanks very much, Sarah, and good morning, everyone. Delighted that you're able to join us this morning. We're looking forward to sharing some insights with you, but as always, we recognise we don't know everything, so we're certainly interested in getting feedback from you either via the chat or after the webinar. What I'd like to do is maybe start with the UK government, because they've been quite active, as we all know. They've introduced several initiatives to support business through this pandemic, as well as the job retention scheme, which allows businesses to furlough employees and be reimbursed 80% of their gross pay. They've also allowed VAT payments falling due between the 20th of March and the 30th of June this year to be automatically deferred. Businesses obviously still need to submit their VAT returns by the normal filing date, but have until the end of March next year to pay VAT due, and there's no penalties or interest charge. It is one important point to note that if you do pay your VAT by direct debit, you need to cancel this before the due date or they'll take the cash anyway. But the government have also introduced 3 types of loan scheme to specifically support varying sizes of businesses, particularly those that were viable before the Covid-19 outbreak, but are now facing significant cash flow difficulties. So get ready for a few acronyms. The first one is the Coronavirus Business Interruption Loan Scheme, the CBILS as it's become known. This is designed to help small and medium-sized businesses, those with turnover of no more than 45 million, to access emergency funding in the form of loans, overdrafts, invoice or asset financing. The government provides lenders with an 80% guarantee on the loans, and the first 12 months of interest payments and lenders' fees are covered by the government. The second scheme is for larger businesses, the CLBILS, the Corona Large Business Interruption Loan Scheme. And this is designed to help companies with turnover of between 45 million and 500 million. The loans will also be 80% guaranteed, but are not interest-free. There are 2 categories of potential funding under this scheme. Those businesses up to between 45 and 200 million can apply for loans up to 25 million, and there's up to 50 million available for those businesses with a turnover of more than 400 million. And then the final scheme in that regard is what they call the COVID-19 Corporate Financing Facility, the CTFF. And this is targeted at much larger UK companies, where commercial lenders backed by the Bank of England will buy short-term debt for up to 12 months. So if they're the schemes, how can we help? Well, we found that for many businesses, applying for funding of this type is frankly, it's uncharted territory, and the prospect can be daunting. This is also a time when many business leaders are just struggling to keep things going, keep in touch with their customers, keep in touch with their team. Now, the lenders for the government-backed schemes I've just mentioned will need to be satisfied that the borrowing proposal demonstrates a viable business, were it not for the pandemic, and that the loan will enable you to trade through. Now, we're used to working in businesses to complement the existing leadership, and there are no strangers to preparing compelling business cases that present an attractive proposition to business investors or shareholders. So we can work with you and your accountant to support your cash flow projections with independent professional advice on the quality of your current operations and the strength of future opportunities pipeline and your business plan. We will ensure that the questions asked of a lender are answered in your proposal to allow them to process your application quickly and successfully. Now, as well as the government-backed schemes, there are obviously other ways to boost your finances. We're aware that there are still a lot of commercial lenders that are very much in the market for compelling businesses. And now is a good time to review your strategy and plan for growth through differentiation. We're working with many business leaders at the moment who are using the current crisis to reevaluate their future direction. It may be appropriate now to consider asset-backed or supply chain financing. And I would suggest that now more than ever is a good time to review your corporate governance to improve your financial position. Look at removing or reducing non-value adding variable costs, cancel or delay discretionary spend. And now's a good time to introduce those productivity improvements that you've probably been talking about that will actually work to improve your profits. And really important that you invoice on time and doggedly pursue cash collection. It's really important that as part of your key account management, you know the people who manage the whole payment process in your clients' businesses. So I've mentioned the newly introduced government-backed schemes, but there's one scheme that has been around for 20 years now, and that is the R&D tax credit scheme. We know from experience that many companies are not claiming at all, or not claiming what they are entitled to, leaving a lot of cash on the table. Indeed, through our work with a wide variety of companies in the construction sector and some detailed research we've recently conducted, we found that we're discovering 42% more qualifying expenditure than claiming companies were recovering through their own devices or with traditional accounting specialists. Now, I stress this isn't to say that they were competent, it's just that, unlike us, they don't look at construction through its own language or have a contextual understanding of the design and construction process. The focus is therefore too narrow, whereas we use our experience and expertise to really draw out the excellent innovation that we know is carried out in construction every day. It's important, therefore, that businesses in the sector properly understand how their activities qualify, so that they are encouraged to reclaim their entitlement and reinvest in further improvement. The Department for Business, Energy and Industrial Strategy recently released a report, the Community Innovation Survey, and this indicated a large decrease in innovation in our industry. Well, our own research will challenge this view, and we'll be releasing our response shortly, and we'll be hosting a webinar to go over our findings. So hopefully you can join us again then. So I'll now pass over to Tim Fitch, who will expand on how to use innovation for a financial boost. Tim.
Thanks, Brendan, and hello to everyone. We've got a tremendous response rate to this webinar, which is really exciting. For those that haven't heard of me or don't know me, I'm a co-founder of this business with Brendan. My background is I'm a civil engineer, specialised for a long time in geotechnical engineering, and then the latter part of my corporate career, I was in business development, looking at very large rail projects in London and elsewhere in the UK. But for the past 8 or so years, I've been working together with Brendan building this business. And a few years ago, we came across the R&D tax credit scheme. And I suppose I was, being an engineer, I had the same view of what R&D is as everyone else does in this industry. So, you know, I had that stereotypical view that R&D, well, we don't really do very much of that because it's not done by people in white coats sitting in laboratories, sat on stools with a microscope in front of them, petri dish, and one of those flasks of purple liquid bubbling away with noxious gases coming out the top. And of course, if you're in the pharmaceutical industry, then of course it can look like that. But when I looked into the tax code, not the whole tax code, but the very, very narrow bit which applies to this particular element, what I came across were the definitions of R&D, which didn't really mean anything to me at the time, because unsurprisingly, they're written in tax speak, not construction or engineering or architectural speak. But I sensed an opportunity, so I actually invested 15 months, not full time, but of my thinking time, translating the tax code into something that I could understand and then articulate to my clients and potential clients about what this really means. And of course, when I understood that, when I understood what the potential was for construction, in that projects cannot be delivered without a degree of R&D, this light went on for me, because unlike many other industries, R&D projects at corporate level have a budget, and the finance director understands it and he knows who's spending it and what they're spending it on. In construction, that bit, if it exists at all, is a minor part of what actually happens in construction businesses with regards to research and development, because it happens on projects. It's not everything you do on a project, but part of what you do on your delivery of projects, whether it's during the design phase or the delivery phase, some of that counts. And that was, for me, the light bulb moment. And I could see then that there was an opportunity for us as a business consultancy to help the industry refinance itself and get further funds in to increase the rate at which developments happen in this industry. Because we all know they could be faster. We're not the greatest or fastest adopter of technology. But on the other hand, as R&D is defined in the tax code, we're actually doing a lot more than we think, and a lot more than people who criticise the industry believe, because they use the statistics to beat us. So, as Brendan mentioned, the R&D scheme's been around for about 20 years, and the latest statistics from the ONS say that construction's claiming about 1.7% of the pie. The total pie is large. It's about £3.5 billion that gets paid out every year. Most of it goes to manufacturing and technology, which you might expect. But what we have found is, remember that's 1.7%, but construction is about 8%. It's 10% if you add in some of the support services like engineering and architecture. It's 10% of the economy. It's only getting 1.7% of the pie. People have used that to knock us, to say we're not innovative. We now know that's not actually true. It's one of Winston Churchill's sayings, statistics, lies, damn lies and statistics. Well, that statistic's been misinterpreted. The reason that the claims in construction are relatively low is because partly we're modest. Engineers, I'm an engineer, we're a bit diffident about what we do. We often ask people, do you do any R&D? And of course they say, no, of course we don't, we just build stuff. And then we say, well, don't you solve problems? And of course they say, well, I spend my whole day solving problems. So we then say, well, okay. So if the two headline definitions really are overcoming technological uncertainties and dealing with systems uncertainties, which aren't everyday language in construction. But what they really mean is overcoming technical risk or dealing with technical risk, and systems uncertainty is really dealing with where you're applying more than one system in a project and making sure that they interact in a correct way. So as I come from a foundation background, I always say, imagine you're building a deep foundation, a deep basement. You've got retaining walls, wading beams, props, piles, king piles, anchors, instrumentation, all of that stuff. There's a massive amount of systems uncertainty there. So where have we got to? So there's this huge opportunity. Many businesses are already claiming, but what we found, and we'll cut your next slide, Sarah, please, if you don't mind. What we found with our work, just slide before that, don't mind.
Sorry about that. This one?
Sorry, no, the one before with the pound sign. So what we found with our clients is that, no, the one before the pound, two before that with the pound sign, is that we have, over the past 5 years, we've developed a 4-step process which uncovers these, the R&D activity in a particular business's workload. It's a simple 4-step process, and what we've proven over the past 6 or 7 weeks during the lockdown is it can all be done virtually. So we've learned something during this crisis in that we can operate all of our processes remotely, just like this, either Zoom or Teams type things. So our 4-step process is we run a discovery workshop with your people. We look back 2 years over what you've done, and from that we get an overview, and we're able to look at, we'll have ranked all of the projects you've been involved with over the past couple of years. The next step is we gather information that you've already got. You don't have to produce anything, you just drop it in our data room. And then once we've analysed all that, we'll do some follow-up interviews on the most representative projects to get a much deeper dive. Those typically take half an hour or so with your people. Typically we do 6 to 10 of those. We then write the whole thing up, and then we quantify your costs and produce a report, which we then come back to you, run through it with you to make sure it's factually correct. We explain how we calculated the qualifying cost. And once you're happy with it, all you need to do is then send it to your accountant, and he can, or she can, very quickly update your CT600, that's the corporate tax form. And then you have to wait, I'm afraid, for HMRC. They have undertaken during this crisis to process 95% of claims in 28 days. And indeed, some of the claims that we submitted at the very, very last day of March have already been paid. So that, to a degree, supports what they've said. They sometimes take longer. However, that's what we're doing. Many of you, I'm sure, will already be making claims. Now, we did a piece of research. Next slide now, Sarah, thank you. Oh, I'll just get my notes up, sorry. Yeah, so we did, many of you had already been claiming, but what, as Brendan has mentioned, we've done some research in conjunction with the Institution of Civil Engineers, and we produced the Mind the Gap report, which you can download from our website. And we compared a cohort of a sample, some anonymised data from about 90 firms that responded to a questionnaire that they put out about what they claimed and the type of business they were and all those sorts of things and how much benefit they got. And we compared that with a cohort of 50 of our own clients which were in a similar space. And that's what the Mind the Gap report is. And next slide, please, Sarah. So here's a key graphic that is in that report. Let me just explain it to you. The x-axis is the sort of scale of business from very small businesses in the 1 to 5 million range up to large, medium-sized businesses in the sort of £50 million range. So we are talking here specifically about the R&D tax credit scheme. There is another scheme called RDEC, which is for larger businesses. It's a similar story, but the data that we used was focused on this one. And on the y-axis is the net benefit that the businesses receive from HMRC on a yearly basis. And you can see that there are some very big numbers there, ranging from 200,000 up to over £1 million. And the yellow line is the control group provided anonymously in an anonymised fashion by the Institution of Civil Engineers, and the red line is our cohort of clients. And you can see there's a gap. and it's about 40 to 42% across the range. And that really is, we say, of course we would say it, prima facie evidence that because of our in-depth knowledge of construction, particularly the design and the construction processes, based on not just Brendan and I's experience, but our whole team are either engineers, architects, commercial people, they're all extremely highly qualified. Plus, this is the big plus, they've got industry experience. So that allows us to ask the right questions during those interviews, importantly, the right follow-up questions, and we can analyse your material that you supply to us in a way which, you know, we can read it, we understand it, we know what the three-letter acronyms mean, because we've been dealing with this all of our professional lives. So, next slide, please, Sarah. So if you're interested in the Mind the Gap report, you can download it from our website. If you would like to have a no obligation discussion with me or one of my team, again, email me. My email address is on our website, and we can book a Teams meeting just like this, where we can discuss your particular case and see if there's any cash that we can release for you, because the sums can be quite significant, and we can, subject to HMRC performing to their KPIs that they've confirmed recently, get the cash to you within a few months. And of course it comes in net of tax. So the cash comes in, you can use it for either just working capital or investment in R&D, further R&D, or whatever you want to do with it. Next slide, please. Of course, this is our team. Some of that, I'm sure there's some of those will be familiar to you. As I said, all of our frontline troops who deal with the R&D are engineers, architects, and commercial people. They're all super bright and easy to deal with, and we do everything for you. We do all the heavy lifting. Some of our clients come back and say, well, I'm a bit concerned, but it's going to be a real time suck on my people. Well, we've designed that process so that it isn't. We do all the heavy lifting, and where you see hundreds of thousands of pounds coming in for one of our clients, they've probably expended a few man days effort to get that. We do all the bulk of it. Okay, right, one other thing. So if we regularly, about once a fortnight, we have our podcast, which is the Construction Big Breakfast. You can find it on the Invennt YouTube channel. Please sign up for that and you'll get regular updates about when we release a new episode. They're fun, a bit like this. There's obviously a bit of banter about breakfast, but we do actually talk about construction matters and things that are of interest to everyone. We have some very, very interesting guests. That's another great innovation that we've brought to our own business over the past year or so. So finally, it's time for Q&A. Is that right, Sarah?
Awesome. Thank you, Tim. Thank you, Brendan. I would like to take some time now. If anybody would like to ask any questions, any Q&A questions, please feel free to take advantage of the chat option and type one in. If you'd like to and you're comfortable to unmute yourself and ask a question vocally, that's great as well. And then our podcast is also on iTunes too, and all other podcast feeds. So if you don't use YouTube, you can still listen to it on iTunes as well. I'll just wait for some questions to come through. And thank you all so much for joining us as well.
Tim, can you hear me? It's Tony Ward.
Oh, hello, Tony. Yes, I can.
Not so much a question, more of an endorsement to everybody listening. As some of you will know, I was formerly chairman of AKS Ward, medium-sized construction consultants, structural and civil engineering, and 3 or 4 years ago, I engaged Invennt to look at our business, and Invennt achieved an astonishing beneficial result to the firm. I'm now retired from that firm, not as a result of that benefit, but I'm now a consultant with Invennt. I'm part of the team to endorse and propagate amongst my contacts in the industry the real benefits of this scheme. So it is real. ACAS Ward had a huge result, and I would encourage those of you listening in who are not yet benefiting to actually engage with this. So end of my contribution, but it is real. And as Tim and Brendan have said, the HMRC are currently active with this. Thanks.
Thank you, Tony. And does anybody else have any questions or any comments they'd like to make? Questions about any of the available government funding or loan schemes available, or any R&D questions? We're happy to take some time to answer.
One question I was expecting was, what are examples of qualifying expenditure? Because our process, that's really what we're looking for. We're trying to find examples of research and development activity and then quantify that. So that's putting a cost to something that you've already done. So when we're looking at this stuff, it's all historical. So this is the great thing. It's just stuff you've done over the past couple of years. We can go back 2 years, find what you've done over those 2 years, and then produce our report, and you can make your claim. So it's almost money. You've got money in the bank already, you just don't realise it. So sorts of things that are often useful or qualify in construction is developing new construction technique or use of materials to suit particular design aspirations, performing analysis of proposed structures, materials and methods to understand building movement, thermal issues or peculiar loadings. As I mentioned before, demonstrating the safe interaction of building subsystems. That could be, as I've mentioned, in the ground. It could be M&E subsystems. They're a particularly good place to look. Heritage issues, if you're an architect or a contractor, often have significant R&D within them. Reducing waste or the carbon footprint of the construction of the finished building or the process to get there. Obviously, reducing waste is a big thing. If you're performing or designing and constructing buildings to highly sustainable solutions, outperforming industry standards, so say BREEAM excellent or outstanding, you're producing something which is outside the norm. Again, lots of those activities are qualify. So I hope that gives you an idea that it won't be everything everyone does, but there's a percentage of your people's time and maybe your subcontractors and some of the materials you use which can qualify for this benefit, and it's all historic. So if you're looking for a cash injection over the next few months, we can look back 2 years on what you've been doing, formulate the report, and you should then get a significant sum, depending on the type of business you are, back from HMRC, hopefully before the summer, or the summer's out at least.
Good news, definitely. We've just had a question come in. Can companies claim for R&D and still ask for a coronavirus loan at the same time?
Yes, they're totally separate.
Okay, great.
So the R&D is an historic thing. It's about money you've already spent internally in your business. You may not have realised it was on R&D. You've spent the money already. It's nothing to do with what you've been paid. It's nothing to do really with profits. It's cost. Cost you've already incurred in the past. You can then essentially what happens is you resubmit your corporate tax return for that particular year. You get 2 years to resubmit from the end of your particular tax year. And the money comes back because you've either overpaid tax, or if you're loss making, bizarrely, you get more money as a cash injection. So it doesn't really matter whether you're profit making or loss making, there's still a chunk of cash to get. and you can still apply for all of the other COVID stuff that Brendan outlined as a separate matter.
Great, thank you.
Tony Ward again. Could I just add, maybe, and clarify that, of course, this is not only retrospective for first timers, current year and past year, but ongoing in future years as well.
Oh yes. So we've got clients who've been with. I mean, Tony's firm's a good example where we're in the 4th or 5th year of making claims for those businesses. So that what happens is you can pick up 2 years together. Usually the first year you claim, and then we just repeat the exercise on a 12-month basis. So you get a continuous slug of cash, or you reduce your tax bill depending on how you can choose how you do it. But the fact is, this is something you can do every year. The first year you do it, you get a sort of a bonus because there's normally 2 years to catch up on, and you get that you get sort of double bubble the first time you claim.
Great. I've got another question here from Trevor. Are charities undertaking development activity qualifying entities? Wow, sorry,
No.
that was hard to say.
Sorry, charities can't claim. You have to be a limited company.
Okay.
So that really brings on to another question that often gets asked. This applies to limited companies who are limited in the UK and pay tax in the UK. If you are an LLP and that's it, you can't claim. If you're an LLP that owns a limited company, often that's where your staff sit. The limited company can make a claim. The LLP cannot. So if you're an LLP and there's nothing else there, there's no limited company underneath, I'm afraid this doesn't apply to you. If you're an LLP that owns a limited company where your staff are mostly employed, then that limited company can.
Great.
Tony Ward again. Just to add to that, we've had some clients, of course, who were formerly LLPs who had that light bulb moment when we talked to them about R&D, and indeed then subsequently converted to a limited company because the claim was so beneficial compared with the LLP tax regime.
Yeah, there's lots of stories like that.
And if anybody would like to speak and raise their hand, there's an option to raise your hand and I can unmute you and you can ask a question vocally. But we've had a few more questions come through. So the next one is, how long does the claim development usually take? If Tim or Brendan would like to answer that one.
It looks like Tim might have frozen, so let me try and pick that one up.
Sure,
It really does depend. The HMRC aspire to process claims very quickly, so we've had some examples where within a matter of a month people have received their cash. There was a period last year where HMRC were struggling with their processes, seemed to be subsumed, and there were examples where claims were actually going out several months. I think we experienced one that was as far as 9 months. But generally they seek to get them back within a month, and we currently assess that on average the longest and the shortest, and we understand that HMRC are really working hard now to catch up on that backlog, so we're expecting a vast improvement on that average.
Great, awesome, thank you for that. Next one is from Jerry. A nice haircut, Brendan.
Don't let him on.
Where did you find some banter?
What did he say? I across you, Sarah.
Where did you find your barber, Brendan?
Oh, okay. No, that's a state secret. There are only certain people that are allowed to go there, but Jerry certainly hasn't found that because I don't think he's been to a barber for about 25 years. So I'll get in touch with you separately, Jerry.
Thank you. Just a quick question. Can you hear me?
Yes.
I can loud and clear, unfortunately.
Well, thanks very much. I'm really enjoying the show. Since I came on air, I see my HMRC payment for the furloughed staff has just popped into my bank account.
Good.
Oh, very good news.
Pleased with that. And last year, I was surprised to see my £10,000 grant from Harrow Council came in a few days after the application. So things seem to be working. I'm hoping this afternoon to get the approval for my COVID loan, my Sybil's loan.
Good.
So all of these things are great. And we got very busy. We used to always do it, but sanitizers and masks have really taken off, as a lot of our construction clients are looking for these. So that's keeping us very busy. So my question is, what is the steps to coming back to full employment in construction, or has anyone any views on those, or when will we see sites open fully?
Well, your guess is as good as ours, Jerry, but certainly there are moves afoot. You can see that people are now starting to plan towards that. I think there is, I was hearing yesterday about a 3-set type process where there is a realization that we've got to settle things down and then start to think about what is going to be the procurement process for the future. So rather than just rush back into starting new projects, I think it's about finishing off those projects that are up and running to make sure that they can safely be completed. So that's the first stage. The second stage is to start planning how subsequent schemes are procured, so that there isn't a rush back into it. And that, as importantly, some of the great learning that has come out of this crisis, particularly when you see the Nightingale Hospital and examples of that, they have been procured in a very special way. They've got integrated supply chains, there is true collaboration, and I think there is a realization in the public sector that there is a better way of procuring projects. So I think the second stage is ensuring that the procurement and the contractual process is in place to make sure that schemes are brought on into market in a more effective way in the future. And then the third stage is about renaissance. It's about, based on the learning that we've all got through this, based on the new way of working, how do we now start to exploit that? Because there's a valid question as to where is all this cash going to come from? Cash is always available if it can be spent wisely. And I think the industry has now got a great opportunity to lobby the government to make sure that we are seen as a safe pair of hands to receive that cash. It can be invested wisely, it can help re-employ people, it can help get the economy going again. And I think there is a real opportunity for us now to make a name for ourselves as a sector, to be at the vanguard of getting us out of this situation. So I can't answer the question finitely with time, but I can answer it on the basis that I'm seeing very clear steps that we are starting to plan for movement out. And one would hope that over the course of the next few weeks, we're starting to get more guidance from government on that front.
Thank you.
Thanks,
You're
Jerry.
welcome, Jerry.
Thank you for that one. So we have a couple other questions here, but I just want to make sure we're not missing anybody's questions. So just keep noted that you are muted. There's an option to unmute yourself. So if you can do that and then you'd like to speak and ask a question, please feel free to do that. If not, then there's a chat box in the top right corner and you can just click on that and then you can type in a question. So the next question here is from O'Brien.
Paul
O'Brien, okay, what are the ballpark costs of the process?
Right, so this is a bit remiss of me. I'll have to give myself a black mark. We do it all on a completely contingent basis. So there's no upfront costs that our clients have to invest. We take a percentage of the benefit that you get from HMRC, and we take the bulk of that when you've got the money. All we ask for is a small deposit once we've lodged the report with you at the end of our process. We've done all of our work. I'm not going to quote a figure over the internet about what our percentage is, but it is reasonable and it's competitive, bearing in mind that the research shows that we get 42% more than the average the average business out there who's involved in this particular activity, and therefore we'd say our fee is actually negative, because although you do end up giving us cash, you're paying it out of money that you wouldn't have had anyway. So it's a lot less than 42%. I can tell you that. Okay. No one pays that much.
Great, thank you for that one. I've got another private question here that somebody typed in. How do R&D claims work with subcontractors?
Right, it depends whether you are a subcontractor or you employ subcontractors. So subcontractors, particularly specialists, really specialist subcontractors, typically have quite high R&D claims because of they're very technical. They have a very high technical content in what they do. If you are a tier one or a main contractor, depending on scale, you can often claim some of the R&D, some of the subcontract costs within your own claim. Whether that's obviously that could be physical subcontract costs if they've had some part in the R&D. Now, bear in mind, you won't have sent them it's unlikely you sent them an order that says, please carry out this R&D. But it would be implicit in the scope of what you may have asked them to do. So we would analyse all of that. We'd look at those contracts. And if a portion of that subcontract cost qualifies, then we'd include it in your claim. The one thing to remember is that for direct costs, like your own staff costs, you can claim, you spend £1, you can claim £1. With subcontract costs, if you're on the R&D scheme, which is for the SMEs, anything up to about 80 or 90 million turnover or 500 employees, you can only ever claim back 65% tops of an invoice, because the 35 is the HMRC's blanket view of what overhead profit is.
Okay,
so
thank you.
That scales it back. But yes, in the broad sense, yes, you can.
Okay, thank you for that one. We've got another one here. My project isn't finished yet. Can I still claim? Or what if the project fails?
Right, so R&D doesn't have to be successful to be claimable. It's the fact that you've set out to do something to deal with some technological uncertainty. If you go down a blind alley and it doesn't work, you still carried out R&D activities and therefore you can claim it. If the project is unfinished, you can, for any particular year, you can claim the costs within that year. So as I mentioned earlier, when we're looking back in time at a client's activities, we're only looking at costs. So it's costs incurred in any particular financial year. Now, for most projects in construction and design and architecture, the higher proportion of R&D activity happens in the first third of the project. It's just, that's the characteristics of our industry. But nevertheless, there can be an ongoing R&D activity throughout the life of the project. It just depends what you're doing.
Okay.
So hopefully that answers your question.
All right, I've got another question that came through privately. Do my overseas projects qualify?
They can do if the activity was carried out in the UK.
Okay, let me just scroll through. If anybody else has another question, oh, one more came through. Are bidding activities corresponding to resolving technical uncertainty qualify as R&D?
Yes. So here's a thing where you can actually offset some of your, well, it doesn't matter whether they failed or not. Bids, if you've been doing design and construction type bids and you've got an industry standard 1 in 5 success rate, it's possible that some of the costs on the other 4, I mean, in fact, including the one that you did win, can qualify. So you can use this to mitigate some of your bid costs.
Okay, I've got a question for Brendan here. Not really related to R&D, but Kieran would like to know what Brendan thinks of the new normal might be, i.e. beyond coronavirus, and how it will affect construction businesses in the future.
Yeah, I think there are a number of things that are going to change. I touched on the whole procurement process. I think that inevitably is going to change now. I think there are too many examples now of success to be ignored. So I think there is a lot of good that is going to come out of that. I think the other thing is, as we're demonstrating here this morning, the use of technology has completely taken off. I think technology has been a great enabler of communication during this process, and it raises a lot of questions as to why we did what we used to do. There is no need for us all to be traveling around on public transport. There's a cost to us as individuals, there's a financial cost, there's an environmental cost. So I think there will be a lot less travel. Certainly speaking to people recently in the air sector, there is going to be a significant downturn in flights and travel, business and pleasure. So that's going to have a big impact on that sector. However, there's likely to be a big increase in rail and road. Network Rail and Highways England have already announced significant increase in expenditure. Plans are looking to bring forward some of their future plans. So I think there'll be a big growth in that area. Clearly, the focus on health now will encourage further investment that way. I think one of the big, so I think there's a lot of positives that will come out of it. I think one of the big concerns that I certainly have is the impact it's had on oil prices now. The cost of extraction is circa $45 a barrel, and the price now, we've seen it went below zeros. I think the last time I looked was about $20 a barrel. Well, that just isn't sustainable. And therefore, there are going to be major organizations that are drastically looking at their investment opportunities. There'll be a big cutback in capital expenditure. So that's going to have a ripple impact on our sector, I have no doubt. But I think in the short term, there will be a lot of positive. I think there really is. I think it will sort out a lot of the waste that was in our industry. It will allow us to focus on value. And I think what we've got to do now is help everyone get this economy moving again. I think we had a video question there as well, did we? Is that Jack on video?
It is Jack. He's muted at the moment.
Go ahead. Yep, Jack.
Yeah, hi there. One thing I wanted to perhaps suggest is there's a perception of R&D credits being something which you only qualify for if you wear a white lab coat and, breaking new scientific discoveries. So perhaps some worked examples of the types of claims which qualify might help to break down that perception. The other question I did have actually is there a de minimis limit to the sorts of the level of expenditure where you'd be interested? I mean, do you have a kind of an entry point? And what would that be? In terms of,
yeah, okay. Your first point, Jack, I did give a few examples of the types of things that R&D looks like in either a construction company, an architect or an engineer. I can give a few more off my crib sheet. So these are things that we're commonly looking for. So use of technology for the first time in the UK, or either new technology or the use of technology first time in the UK or in this sector, so even transferring from one sector to another. Off-site modular solutions, bespoke ones, that's a good place to look. Developing improving the speed at which work can be done, those sorts of productivity improvements, the adoption of technology to do that. Things that look at old buildings and trying to improve their performance, so altering the structural core, cut and carve projects where there's an awful lot of uncertainty. Where you're working on an existing building, there's massive uncertainty which you can never really be sure of at the start. This is what all of our listeners who are in construction would call risk. Well, that risk, or at least part of that risk, the management of that is claimable as R&D expenditure. I don't know if that helps. Your second point about scale of businesses. So we've done quite a small one very recently. When I say recently, I think we finished it on Monday. And I'm trying to think what the number was. I think the number was about the benefit that our client will get will be in the range of about £30,000 a year. So that would have meant qualifying costs of about 120,000. So that was quite a small consultancy. That's quite a small one for us. But I wouldn't let that put people off, because oftentimes there's other value that both parties can get from that interaction. So this one I'm thinking of, we can see that we can help him help his clients because his clients aren't claiming either. And so there's some opportunities there for him to add value to his own clients, as well as us add value directly to him. Hope that helps.
Okay. Just leading on, I think it was Terry who made the point that a lot of businesses have changed status from partnership to incorporate in order to take advantage of R&D tax credit claims. There is a specific relief, incorporation relief, which allows that to happen in a fairly seamless way, where there isn't any capital gains tax or SDLT on that change of status. So I just would I'd add that you know, people might be put off changing status of business in believing that there'll be a negative tax consequence to that. Well, HMRC has specific reliefs which encourage people to be able to adopt a limited format without incurring the usual tax consequences.
Well, I'm very glad you made that comment, Jack, because obviously we can't comment. The only bit of tax we can comment on really is the R&D. So those consequences around changing the form of your business, I'm glad you made that comment, because that's useful to people who are listening to it. And we know, we've seen it, particularly with architects, a lot of them have changed now. So they're obviously getting some pretty sound advice. But yeah, each business has to look at it on its merits.
Great. I'm just cautious of time, so we've got 5 minutes left. There's 2 other questions to answer, and then we'll bring this to a close. So does it make a difference for R&D companies if they are loss-making or profit-making?
It does. If you're loss-making in a particular year that you're claiming, what I didn't say was what the benefits are. So for every £1 that we find, if you're profitable, the tax credit that comes back is about, net this is 25%. So roughly speaking, for every £1,000 of costs that we find, you would get back either as repaid tax or a tax credit to carry forward, the choice is yours, of about 250. If you're loss making, it's 33.33%, which is remarkable. So they're the numbers if you're a SME business, which is anything up to about 80-90 million turnover and less than 500 staff. That's the level of benefit. And of course, our fee is a tiny bit of the bit you get.
Great. Okay, thank you for that. And then Phil has a comment. From what you said, it seems that the HMRC criteria is very broad. Is that your experience? You were talking a little bit about that, but.
Yeah, they are broad, and they're broad because they have to be fair to all sectors, apart from lawyers who can't claim, and 1 or 2 other sectors. But everyone else, they're written for that. There is a guidance document which gives some more specific guidance on the criteria, because you can imagine some of those definitions, there are significant grey areas. The guidance tightens those up a little bit. And so, for instance, not all parts of the drug development process, if you're a pharma business, can claim, but obviously the front end of it, which is where you discover the chemicals and things like that, can. And the same is true of various parts of construction. So the guidance document plus our experience over the past 5 years, of course, we've had lots of interactions with HMRC, gives us, allows us to be sure that our claims are robust and high quality.
Great, thank you for that. All right, so I'll bring it to a close here. Thank you, Tim. Thank you, Brendan, for coming on. Thank you, everybody who asked some questions and got involved. That was really great, a really good webinar. It's great to be able to see some faces and some voices. We really enjoyed getting in touch with you all. And if you have any questions that we weren't able to answer, feel free to send us an email. Our website is www.inventt.com. You can also send an email over to info@inventt.com, or Tim and Brendan's emails are both listed on our website there. And as Brendan did mention at the beginning, we're going to be releasing a response to the Community Innovation Survey. So keep in touch with us on our LinkedIn company page, as we'll be setting up an event for that shortly in the next couple of weeks' time. And thank you so much for joining us today. And we look forward to seeing you all in the next one. Stay safe and stay healthy. All right. Thank you, everybody.
Hey, folks.
Bye, everyone.
Bye.
Bye.
Bye.